Welcome back. Today is Valuation Friday, soon to become a more important name than Black Friday for those of you in America. Speaking of America, I wish you all a happy Thanksgiving and hope you're all doing well. In today's video, we're discussing my valuation model for Block Incorporated. Is Block a dud, or is it going to the moon? Let's find out. Don't forget to like and subscribe. This thesis is available on my Patreon. The link is in the comments below. Here's the video I released just a few months ago. Check it out if you haven't seen it yet. It is a must-see. This video will be an update to my previous valuation model. And guess what? I nailed it. So, what is Block? Block is a technology-driven financial services company that provides innovative solutions to empower businesses and individuals in the digital economy. In my video, I gave Block stock a buy rating. I did a very conservative DCF model and found the stock undervalued, but a bit risky due to competition. And that risk is actually still there. As it turns out, I was right. After the Q3 earnings, Block stock blew up, as you can see. Not to pat myself on the back, but anyway, that's in the past. Due to the earnings, I have updated my model and have some new insights for you all, and a new price target. That is the focus of today's video. See that like button? All it takes is a little click. I will give you my base case price target in this video. If you want the conservative or optimistic cases, or if you want to read my 16-page investment thesis, head on over to my Patreon. Buckle up, because we're about to go on a ride. Oh, she snuck in again. Let's discuss the Q3 earnings real quick. Revenue expectations were $5.43 billion, EPS 46 cents, 2023 adjusted EBITDA $1.5 billion, revenue $5.6 billion, a beat. EPS came in at 55 cents, also a beat, a nice beat actually. Adjusted EBITDA came in at a record $477 million. This number, along with adjusted operating income, is the highlights of the report in my opinion. Basically, the reason Square was able to beat was because of efficiencies. They were able to cut costs in a variety of areas and just increase the overall efficiency of their organization. Now, what is adjusted operating income? Adjusted operating income includes SBC, which is share-based compensation, and depreciation. It is a more accurate view of the value that Block generates for shareholders as opposed to something like adjusted EBITDA, for example. Although it is not net income. That also got paid down some this last quarter. Adjusted EBITDA for 2023 got increased from $1.5 billion to $1.66 billion to $1.68 billion. Adjusted operating income outlook for 2023 got raised from $25 million to $205 to $225 million. That is a big raise. Gross profit got boosted to $1.96 to $1.98, $1.96 to $1.98 billion. Block also gave a 2024 outlook that beat expectations. So overall, it's a great report. Now, the rule of 40 for Block is a combination of gross profit growth and their adjusted operating income percent. It is a measure of growth and efficiency for tech companies. Block's main goal is to get this number above 40. As you can see, it used to be above 40, but due to recent issues, it dropped below. It actually dropped into the negatives last year, but since has increased to about 26, actually 27. I made an error in this graph. I used revenue instead of gross margin growth. Now onto the earnings call, and there was a lot of emphasis that was placed on the Rule of 40. Basically, the entire talk of the earnings call was efficiencies and innovation. Those were the two core structures of the call. Now, Block expects to reach Rule of 40 by 2026. And they also mentioned $1 billion share repurchase agreement. That's a lot considering their current market cap, which is actually pretty small. Square's banking's up 20%. They're also making an adjustment to their accounting. So now 100% of the buy now pay later gross profit will be in the Cash App next quarter, up from an even split in the current quarter between Square and Cash App. They are expecting Rule of 27 this year. That's 5 points of adjusted operating income margin improvement and 6 points of adjusted EBITDA margin improvement compared to 2022. Block plans to reach Rule of 40 in 2026 with at least mid-teens gross profit growth and approximately mid-20% adjusted operating income margin. So that's the goal, and that's what we're going to sort of gear towards when we do our evaluation. They believe they're still less than 5% penetrated against a $200 billion total addressable market. Keep in mind, though, that the TAM for their field is split amongst multiple companies, many companies. There are a lot of competition in fintech. So Square, or Block rather, will never achieve 100% of the TAM, or even close to that. But they're currently less than 5%, and they should be able to increase market share over time. They've implemented an absolute cap on the number of people at their company. So the cap that they set is 12,000 people, and it compares to their current size of just over 13,000 people as of the end of the third quarter. So that means that Block's doing rounds of layoffs, which sucks for the employees there. I feel for them, and I hope they bounce back to a better future. We expect, and they said they expect to achieve profitability on a GAAP operating income basis in 2024. They aim to deliver $875 million in adjusted operating income, up approximately 4 times compared to their 2023 guidance. They said that we expect to deliver $2.4 billion in adjusted EBITDA, an increase of more than 40% relative to their 2023 guide, and to deliver strong adjusted free cash flow growth next year as well. Now, Jack mentioned that there were a lot of inefficiencies at Block, which they are correcting, specifically in the Square segment. And he mentioned that their teams are siloed, so they don't really talk to each other. There's no cross-team communication and little product integrations. So he is actively working on fixing those things. And a huge focus was made on inefficiencies. Again, this was all discussed in the earnings call. They mentioned that these efforts will start showing in the results early in 2024, and that seems aggressive. But you know what? We'll see. It's a lot of promises with a fast delivery date. Let's see if they're up to the task. Now on to my updates to my evaluation model. This is what you've been waiting for. The biggest difference is I am now breaking down Block's 2 main business segments. Here is Cash App. I'm projecting growth starting at 30% and trending down to 10% over time. Now for Square revenues, I'm projecting 10% in 2024, trending down to 5% in 2032. Actually, let me hide my face. There, now you can see it better. For the Whack-A-Mole chart, due to the decreases in beta number, this has decreased to 13.33%. This is still really high compared to historical numbers, and that sort of weighs down on the valuations. This is primarily due to the elevated risk-free interest rates. That gives us this DCF for our base case. The perpetual valuation comes in at $68.40. You can pause here if you like, but I'll move on. Here's my multiple valuation. The implied stock price here is $78.04. Average these two, and that gives us an implied share price of $73.22 for an upside of 24.06%. Now, again, this is my base case. If you want to see my conservative or optimistic cases, head on over to my Patreon. Don't forget to like and subscribe. Thank you for watching, and I will see you in the next one.